What's up, bro? What's going on? We active, we active, we active. What's going on, Tabby? What's going on? What's going on? What up? Oh, that's why. Hold on. I linked, you know the channel I be sending the link in? The live one, the mentorship one. You know where I be sending the link? It's sent, I connected it to the private, the inner circle. That shit sent it over there. Hold on. I gotta take that off. I think it was gonna like send the same message. That's kind of throw it off. I seen the link go in there. I'm like, what the hell? Hold on. They can't get this. I was like, they can't get this. But alright, hold on. Yeah. I might do one maybe Friday for free for the holiday just cause why not? Just so they can see. We should talk to you later. Alright. Good morning, bro. What's up? What's up? What's up? We active. About to get active today, boy. Feeling good. Nah, Tabby, you got a mic, or you just gonna listen for now? You got one? All right, bro. All right, Elijah. That's cool. That's cool. That's cool. What's good, Pip Huntington? All right, you just gonna listen? All right, bet. All right, bet. That's cool. That's cool, bro. All right, what you call it? Tabby, if you don't mind me asking, because I had a few things I was gonna try to go over with you today, but how? So you said that you trade already, but you're getting into smart money concepts now? Okay. 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 It's good that you're learning the concepts now, then. That's good. Where, if you don't mind me asking, where'd you find me? Just so I can get an idea, like, what you know and don't know. All right, but. Oh, yeah. I get that a lot. But all right, but all right. So I'm gonna go over a few little topics. I'm not gonna go over too much with you since, like you said, I'm not gonna try to overload. And like since I like the way that I go over things is more or less since I've been doing it for a while, it's easier to me, but I gotta kind of simplify so it makes sense to you guys, if that makes sense. But I'm gonna just go over exactly what I would do. So right now, plain chart, nothing. I do have my indicator on. The reason why this is orange is because this highlights my Asian session. I only put it on just to denote, because I mark up the Asian session every day when I wake up, because it's very important with the way I trade. If you've seen my videos, you might have a basic understanding of that already. But the reason I denote it is because if you understand the way the market moves in phases, and there's always consolidation, there's expansion, there's retracements. And if you can basically map out where the consolidation is, you can map out where the market is likely to push away from, if that makes sense. So if we know the Asian session is the session with the least amount of volume, meaning it's more likely to consolidate than any other session, right? So that's the reason why I put the 50% and I put the Asian session high and low, because if I know where this is, I can map out trades based off of these areas. Not just this area, but there's always going to be more than one confirmation. Then after I put the Asian session, I always denote the 12 a.m. open. So right here, these lines that I have, this is just a 12 a.m. So 000. And I denote where it opened, because ideally, if I'm bearish in price, I'm going to want to be I'm going to want to be selling above that open. Why? Because if you look like on a basic daily candle, let's just go to a daily candle. Look at the way price moves. The best entries are always going to be near or just close to the open, because that's where the expansion takes place. So if you're able to buy close to the low on this day or the open, you can catch this full expansion. If you're able to buy near the open on these candles, you're basically buying and you're catching a full expansion. If you're able to sell at this candle's open, you're able to catch the full expansion. So even though I more than likely miss a lot of trades because I trade this way, I'm only trading high probability setups. So that's why it makes a lot of sense for me to wait for specific setups. So all I've done so far is I marked up my Asian session high, the Asian session low, and I marked up the 12 a.m. open. So ideally, if I'm bearish, like I said, I want to sell above this 12 a.m. And if I'm bullish, I want to be buying below. So now that we have that, I'm going to start to go up in time frames. I'm going to start to denote areas in which I can see price have a likelihood to try to respect. So the first thing I see is this right here. This last up candle right here. This last up candle before this whole down move that started right here, that took out these lows to the left. So this is going to be an area I'm going to be anticipating price to have a possible reaction from. Why? Because I know that there's highs right here that didn't tap into this area. So I know more than likely, and you could tell by the way price is starting to reject, it's starting to lose that volume. And you can see how close price is getting to this specific area and how it's slowly falling lower. So as of right now, what I will personally be anticipating, since we made this low down here at 3 a.m., 3:30, I'm going to see if it took out any other lows to the left. The only low it took out was over here. So you see we had this break of market structure to the downside right here. So I know there's a high likelihood that if the London session breaks a low or trades into a specific area or just trades above an old high or old low, there's a high chance that it's going to be the high or the low of the day. So in this case, as you can see from the open where price is right here, price came all the way down, created this low after taking out the liquidity from this low over here, and you can see price start to expand to the top side. So what's the significance in that? When you see things like this, it shows that there's a willingness for basically big bank buyers or institutional money, because as retail traders, we can't move the market. We don't have a lot of money. We can't move it. But the big banks, they can. And they have so much money that when they move the market, you can see footprints. They leave traces behind. So you can see, just like I had this 30-minute order block here, this last up candle before this down move that took out these lows, the same thing will be right here. This 30-minute order block, but this would be a bullish order block. So since I'm looking for more buy situations, I'm going to get rid of this right now. But you can see we have this 30-minute order block right there. I'm going to keep going through all my time frames. We got a 1 hour one right here also. So that's already 2 confirmations for this one specific area. So we got that 30-minute plus 1 hour. And if you guys don't know like the basics of an order block, just let me know right now so I can know how to explain it to you and if I should go into more depth. Do you guys have like a basic understanding of what an order block is, or do you need me to go more in depth to explain it? Okay, I got you right now. So if you understand a order block, you understand that when price retraces back to a specific area, so the last up or down candle before a big move that pushes higher. So say for example, that would be right here. So say reverse this, see how this is the last up candle before a big move to the downside. This would be an area that you would be looking for possible retracements to. So the thing with a breaker block is when price comes down to that area that you want it to move off of, but then keeps going lower, it then breaks market structure. And this could be a specific area that you then look for possible retracements to. If you know simple like break and retest, that's something a lot of retail traders go off. It's basically like that. Think of it as, I'm gonna try to find you an example real quick, just so I can show you right here. See how this is the last up candle, the last down candle before the up move, and I'm gonna go back in time for you. See how this last down candle before the up move, say we possibly had our fib from the low to the high. We saw a whole bunch of confirmations for price to potentially go higher. Say we took a long or something and it didn't happen, and then you see what happens next. You see price break through it, but it doesn't mean that this area isn't valid no more. You can see once price goes on, this candle right here traded back into it, meaning this traded back into that breaker block, and then you see the rejection it had, and it started to drop from there. That would be an example of a breaker block being used. It's basically an order block that gets broken through and disrespected, basically. That's all it really is. Or another way you could look at it is just a break and retest. So you see price broke the downside, retested it, and it came back down. That's like a basic like explanation of what a breaker block is. Here, now I'm gonna go back to market this. Alright, so far all I have denoted is my Asian session high and low. I already know this. I know that there's a high probability that this low down here could possibly be the low of the day. So I'm going to keep that in mind, because if I know this is possibly the low of the day, I already know where price shouldn't go. And if I know where price shouldn't go, I know where I should likely be looking to take price. And if I can find areas in which price is likely to move higher, I'm going to be able to take those trades. So now we're starting to map out where price could likely to go. We have this 30-minute and 1-hour order block. We have this possible low of the day. So now what I'm going to do, I'm going to pull my fib from this low created at London session. I'm going to pull it to this high right here. This high was created at 5:30 in the morning EST. And now what do we see happening? If you put the 38.20%, which is another fib level I use for continuations, you can see that's when price came down, respected it. But the one thing about the 38.20% level that I've noticed over the months and months of me using it is that it doesn't always have that big push afterwards. So some people will be looking for a possible, just like a big move to happen afterwards, but that's not always going to happen. You can see prices starting to lose that momentum. So now that it already respected this one level once, we know that it could likely come down to the second level now. And then now we're looking at multiple confirmations. Now we see that this 62% and the 70.50% from this fib we drew from this high to the low is also in confluence with that 30-minute and 1-hour order block. So now we're starting to find areas in which are more likely to be respected than not likely. I'm also going to put the 50% of it right here, because ideally, if we're looking to get into a trade at this area, having a stop loss all the way to this low isn't going to be ideal, because that's 100 pips. But if you know that this is an area that should be respected, you can at least have your stop loss at least below the 50% of this order block right here. So from this whole down candle, the 50% of it is right here at the 79% of that fib. And I'll just move it over a little bit more. You see how we have multiple confirmations in this one little area? That's when you start to get higher probability setups. Now you start to map out overall what's happening, because if you know how the market moves, you understand that the market moves based on where liquidity is and what it's reaching for. So if you know where the liquidity is, you can easily figure out where price is likely going to reach for. And if you don't know what liquidity is basically just equal highs, equal lows, and anything just like above or below candles. Because what do we know is above and below candles? We have people having their stop losses from going short. We have people with buy stops trying to catch the breakout traders, like Martin used to be. He was one of them boys. No cap. But now we start to map out what's happening. We know that there's liquidity below this low because it's a swing low. We know there's liquidity above all these highs. Why? Because we have one high, two, we have like a triple top forming right now. So now that we know, more than likely, if price goes to get this sell side liquidity, trades in this specific area that we're targeting, we're buying below the 12 a.m. open. We're also buying at a discounted area because we drew our fib from a low to a high. So we're buying at an oversold area to be able to yeah, you'll see in a second. I think there's one right there. But now you can basically anticipate that this is what's going to happen. And then from here, price is going to try to fill in this void up here. Because what you know about big candles like this, you can, one thing I learned before I learned the concept I know now is clean traffic. When you see clean traffic like this, you know it's easy for the candles to do the same thing going back up, because it's similar. It's like a railroad track. When it matches what's happening on the other side. That's why when everyone tells you look left when you're trading, look left, because you see all this consolidation is just making more consolidation. You see right here consolidation, you see all this little consolidation right here, but then you look above, right over here, you see how this is clean traffic. What do you see right here? Clean candles. It's like the same thing. So that's something you can anticipate. So as of right now, what I will personally be doing is I will be waiting for price to come at least all the way down here at around 9 to 9:30 my time. And if you also look at where price is, you see we're at 35,500 right here. So now you see that there's multiple confirmations down here, not just one. You have 1, to the fib. We got the Asian session low. Then we also have the 35,500 level, which is a big figure level. So ideally, if we keep our stop below that level, or we even wait enough to get in near this level, we'll be able to have a very high probability to trade. Why? Because we'll be buying so close to the area in which we think is going to be the low of the day. And if we know this is the low of the day, more than likely price should not come down to this area. So that's basically what I'm looking at right now. This is all I would be doing with US30. This is the trade I would be looking to take. And if it doesn't happen, you just got to call it a day, because you got to keep in mind that during weeks like this, it's a holiday, we have Thanksgiving. The markets aren't going to be perfect. They're not going to give you all good opportunities. It's towards the end of the year. The market isn't going to be running as smoothly. So these are all things you want to keep in mind when trading. So if you have a question on anything that I just did, though, just let me know right now so I could try to explain it as best as possible for you, just to get you the best understanding. It might be the time we have. I have my time starting from, I'll show you right now, from 18 o'clock. So right when my market opens, and I have it all the way to the 2 a.m. candle. So from 18 to 2. If you just want to draw a box, one thing I used to do, I just used to draw a box like this, just to show the Asian session, and it makes it a little bit easier. That makes it better for you. But yeah, just do it by the time. It might be the time that's messing it up, because we're in different time zones too. So that's something I've had an issue with other people too. But if you just put it from 18 o'clock to 2 a.m., you'll have the same range that I do. But now, Martin, what you think? What you think is gonna happen? Let's get your opinion. Let's see how you feeling. It's the bodies of the candles. It's right here. That's why I used to draw boxes. It used to be so much easier. But since that's what I'm saying, since I'm developed now, I don't really have to. But that's what I'm saying for newer traders. There's certain things I do. Like this is basically the area we're looking for a retracement to. This makes it seem way easier to identify. We're using the bodies of the candle because this is the last down candle before this big push to the top side. So if it makes it easier, I might just have it like I'll just have it like this so it's a little clean for you guys, so you guys can visually see what I'm trying to see. So I'm ideally looking for a retracement lower. I want to clear the liquidity below this low, because I know if we clear sell side liquidity, what we're going to be reaching for next is that buy side liquidity. And where's that going to be resting? Above all these highs we have up here. Like I said, we have, where's my drawer? Got this high, and this high. And one thing that you probably heard before is retail logic is sell at resistance, double tops, triple tops, sell at all of them. But that's kind of the opposite of what the big banks are trying to do, because they know the liquidity is above there. So that's where the market is going to try to overall go. And this is just ideally what I would be looking for. This might not even happen, but I know based off of experience that if it comes all the way down to this point at a certain time, that there's going to be a certain level of high probability that's going to be on my side. So that's really all I'm doing right now. I'm just going to be waiting, because as you can see, the market is losing its momentum to the top side. So we just got to wait for that momentum to kick in and wait for it to start to drop. And from there, we're going to try to anticipate what's likely to happen. It's all about patience at the end of the day. You just got to be patient enough to wait for certain setups, because if we can wait for certain setups, we're going to give ourselves the highest probability of either winning that trade, and even if we don't win that trade, the longer we wait, the less trades we're going to take. So even if we take one trade and lose it, we're only going to lose maybe 1-2% or whatever you're risking, compared to maybe losing double that if we would have been taking trades earlier. So waiting for a specific time to trade, knowing when the volume is in the market, is a major key. Yeah, right now you can see this is consolidating. I'm gonna move on to the 4 hour so I can get an idea what's happening on the larger time frames. As you can see, if you look on the 4 hour now, it's starting to give us a different picture. I can see now that we have this 4 hour order block right here, in which price is getting close to. So we can anticipate price could likely tap into it and then drop lower to give us that trade we're looking for on the lower time frame. That's why price is kind of consolidating here, because if I pull that, where is it? It might be a little different because it's broken. Yeah, this is a little different. And I don't know why these brokers are so weird. I really don't. It's a little different here, but you can see price is likely going to tap into this area, this last that up candle before this down move right here. Likely to tap on into it before likely either falling lower and just continuing to drop the rest of the day, or it will drop a little lower before potentially having that push higher, in which we're looking to see. So that's the 4 hour. Now we're going to go to the daily. As you can see, this daily is starting to respect that daily order block that we have here. And if you also see, remember Tabby, that order, the breaker block you were talking about? This is a perfect example of it happening right here. See this last up candle before this down move, but then it got broken through later on. You can see right here, price came down, tapped into it before pushing all the way higher. Mind you, this is on a daily time frame. This is a big move. From this low to this high is about 950 pips. And you can see what happened here now. Price tapped into it again, and you can see the reaction we're having. Mind you, this is on a daily time frame. This candle by itself is about 200 pips. So you can see the willingness to price wanting to go higher. And as long as we're able to keep trading above 35,755, the likelihood of price going higher is going to be on our side. So I'm going to mark that area, 35,755. So ideally up here. Once we start to trade above these highs, 35,750 is going to be a good area in which we could possibly be looking for price to potentially target. And like I said earlier, now we're having all these different confirmations. We have our entry confirmations and we have our target confirmations. Just like I said earlier, we have this big void in price, which we ideally want to look to get filled at some point in time. Maybe not today, but we know overall with the way the market moves, at some point in time, this area will get filled in. It could be today, could be tomorrow, could be next week. But as long as we know where price is likely to move to, we can anticipate where price wants to go on a smaller time frame. So that's really it for now. Now we just gotta wait. It's about 8:40. We about to see what's going on. What's going on, bro? Well, he's connecting, so what's going on? He's connecting. What's going on, bro? Good morning. About to get active. About to get active. You can unmute, or you can mute it. I can't even talk for you, but nah, this is all I'm expecting right now. I know this is simple. It only takes me about 10 minutes to figure out what I'm going to be looking for the day, and if it doesn't happen, oh, change my language. Fuck it. We just know what to expect. So it's all about having high probability setups. The thing about trading that keeps people from losing is they take too many trades or over risking. And they want to be in the market every single day when they don't realize that the market doesn't give opportunities every single day. Some days it does, some days it doesn't. Some days are better opportunities, some days are not as good opportunities. But you gotta basically, what's the word? You gotta categorize good days and bad days. You gotta be able to see what setups work for you, what setups you're likely to trade off of, and things like that. Because everyone's different at the end of the day. What might work for me might not work for you. That's why I don't teach people how to trade. I teach people how I trade and what works for me, because if it works for me, it can work for other people also. That's really it right now. But what's going on, bro? What's your name? How do I say it? How you say your name? Bolokang? Bolokang? Is that right? I probably slaughtered it low key. I said it right? Bolokan? Okay, I got it. Like Bolokan. Alright, I got you, bro. My fault. I gotta know the names. I'd rather mess up now than mess up in like a week. But now, how long you been trading, Bolokan? A year? Okay. How long you been looking into smart money concepts or like anything like that for a while now? Or is it like something new? Okay. So you got a basic understanding of like what kind of. Okay, perfect. That's like one of the main things. If you understand order blocks, you'll be good. Because if you understand order blocks, the breaker blocks are going to be easy for you. The one thing that I feel most people struggle with is just identifying liquidity. I think that's the main thing, because that's something I'm not perfect at it. I'm not gonna pretend like I'm expert at it, because every day you get better. But beginning, identifying liquidity was the main struggle, but it's the most important thing, because if you can identify where the liquidity is, you can identify where the market is gonna reach for and where the market is gonna go to. You can kind of it's like a puzzle. You start to map out a whole bunch of things going on. You can map out where the market ideally wants to go. Like based off of liquidity, I'm basically right now, I'm anticipating price to clear the sell side liquidity, tap into this 30-minute or 1-hour order block, which is also in confluence with my fib long setup that I drew from this low to this high. Then we also have this 35,500 level, which is three confirmations in one. Then we also got that ace in session low, in which we could look to possibly retest before going higher. So that's ideally what I'm looking at right now. And we'll also be buying below the 12 a.m. open, which will give us an ideal setup. And look, that's trade I'm looking to take. It's the highest probability one that I see from what I see right now, based off of higher time frames and lower time frames all combined. What is this? I don't know what happened with this. Is in a different language now. Fuck it. You look. Where's that? The daily time frame. I have no idea. Alright, I'm not even gonna look at that chart no more. Whatever. That's just all types of kill. But we're gonna go to the daily time frame over here. Clear all these. You can see the willingness we're having to respect this general area right here. This daily order block is going to be the main thing that I'm looking for. This is how we were able to, Martin, remember that trade you were able to catch yesterday? It was based off this order block right here. Same thing. But you can see the reaction price is having. You can see price pushed all the way up yesterday before coming all the way down. And now you can see price push all the way down. Before, ideally, what I want to see it continue at least to push up. At least going to the end of this week. It might not happen today, but ideally, I know if price can stay above this breaker block that we have right here, more than likely price is going to continue that upside. So that's all I'm waiting for right now. Now we just got to be patient. We got to wait. And that's it. But Bolokan, what's one thing that you feel as you're struggling in right now? To see if I could try to help you in any way. Yeah, liquidity, that's a big thing. That's a big thing. But ideally, all liquidity is, in simplest terms, is if you ever heard retail people say equal highs, equal lows, double tops, double bottoms, swing highs, swing lows, there's liquidity above all of it. Why? Because we know what would lie above these double tops right here. There's people with their buy stops waiting for when the market starts to push higher, it's going to activate them in so they could possibly catch that breakout trade. So that's one form of liquidity. And that's why, I'm gonna ask you all a question. Have you ever put a stop loss price when it stopped you out and then went your direction anyway? More than likely, it's happened to all of us, because that's just how the market moves. But people call it fake outs. They call it, what's it called? Stop hunts. They have a whole bunch of words for it. But think of it like this. If it's happening all the time, why are you still doing the same thing? You get what I'm saying? And if it's happening to everyone, and majority of the people that trade are failing, what does that tell you? That we obviously were doing something wrong. So that's why I don't sell at double tops. I don't sell at double bottoms, what I do is I buy low and I sell high because I'm getting the best probability. If I'm able to buy at the lowest point, I'll be able to catch expansion. If I'm able to buy at the highest point, if I'm able to sell at the highest point, I'm able to catch expansion to the downside. And then that comes into play with why I always had the 12 a.m. open, because I know if I could buy at the lowest point possible, I could catch expansion. And if I could sell at the highest point possible, I could catch the full expansion. Because the thing is, which people fail to realize, is you don't need to catch every single move. All you need is a small portion. That's all you need. You don't need to catch this full move. Say right here, you were looking to go short. You don't need to catch this full move all the way down to this low, which is 460 points. All you need is possibly like this move right here, 278, or even halfway, 178. It's all about how much you're risking. Your risk is more important than what your reward is. If you can calculate your risk and risk a small amount, but be able to have the possibility of making a lot, that's all that matters, because the only thing we have control of is managing our risk. We never know how much we're going to make on our trade. We never know how far a trade is going to move. We never even know if the market is going to really move in our way. But one thing that is for sure and that we do have control of is the lot size and your stop loss. And all of those things, if you can calculate where to have a good stop loss, you're going to be better off than many other traders. So that's why down here, when I was talking about this possible low of the day, if I know this is the low of the day, I know that there's an extremely high probability that if my stop loss is in this general area, it won't get hit, because I know where the market wants to go overall. And if I know that the market has a high probability during London session around 3 a.m. to around 4 a.m. to making the high or the low of the day, and I have a whole bunch of screenshots of it, then you just have the confidence to wait for certain things. But yeah, right now, nothing's really happening. The market's moving mad slow. Nothing much going on. We just got to be patient right now. That's really what it comes down to. We just got to keep ourselves out from taking unnecessary trades and only take high probability trades. And that's exactly what we're doing right now. We're just waiting. Yeah, back to what I was saying about liquidity. Above these highs, people have stop losses from going short. There's buy stops from people trying to catch the breakout. And what does that mean to traders like us? We know that at some point the market is going to reach for these highs, because above all these highs is the liquidity from other traders, in which we want to see get targeted. And then we can see a possible situation where price comes up, takes all that liquidity before coming all the way down. And I'm going to show you guys a few examples of that happening right now. Let's get all this off. I'm going to show you a few examples of that happening. So for example, right here. Remember how I said London session has a high probability of making the high or the low of the day? So right here, we're going to look at this candle right here. Why is this candle important? You got to look at the timing. 2:30, 2:45 in the morning. 15 minutes before London session. What happened? Price came up, got the liquidity from above these highs, from above this high right here. And then what happened? Came up, got all that liquidity, and dropped. And you can see, like I said earlier, us as retail traders, we can't move the market like this. We can't move the market like this. This is big banks and people with institutional money moving. And when you see stuff like this happen, you want to be able to learn and identify what's going on, because if you're able to get on the right side of these trades, like I said, you don't need to catch the full thing. All you need is a portion. If you would have caught 25% of it, you could have caught 112 pips. You would have caught maybe 50%, you could have caught 200 pips. If you would have held the whole thing, which not everyone should do, it would have been around 360 pips. But that's based off of just this right here, understanding that when London had this push above early in the day, that this is the high that had a possibility of making the high of the day. And as you can see, it was correct, and price never came back to that area. And these are things that happen on a day-to-day basis. London session and Asian session is very important. The session doesn't, like, knowing your session isn't only important because of when to trade, but you gotta understand that each session has certain characteristics that if you can identify, when you trade New York session, you're able to have the highest probability because you have all the data that already happened. New York session is the easiest trading session by far, because we can use every other session from the day before to help us. basically. But basically map out our trades. That's why I love New York session. Because based off of London session and Asian session, we already know what we want to see happen. And if it doesn't happen, it is what it is. We just lose our trade. That's why, like I said, you just got to be able to manage risk, and that's the most important thing we could do. Yeah, right now the market really ain't even moving, to be honest. It's been like the small little range. You just got to wait for it to have a breakout right now. If it breaks to the top side, then honestly, I'm just going to be done. Just keep our risk small, because mind you, you don't want to take no unnecessary risk, especially before Thanksgiving. You're going to be at Thanksgiving upset as hell. You're like, damn, I shouldn't have took that trade. Like, I should have just took the week off. You know what I mean? You just never want to put yourself in that position, because shit, we all been there. We all know what it's like to lose money. It's not a good feeling. So just managing risk is going to take you a very long way, trust me. But right now, we just wait. But what pairs you guys be trading? GJ, yeah, that's a good pair. I recommend that for a lot of people. What about you, Luca? Okay. Yeah, you like them volatile pairs, huh? Because gold is like US30, they're both volatile. That's why I like them, though. Because if you know where the volume is, you're able to catch. Like I said, you don't need to catch the full move. You can make a living off of catching 100 pips, 50 pips, easily. And same with GJ. GJ is very volatile, too, for a Forex pair. I like GJ. Before I started trading US30 about a year and a half ago, I've been trading US30 for like a year and a half strictly already. I used to trade like GJ, GBP, JPY. I used to trade GBP, USD. Gold, every time I traded gold, I got clapped up. I ain't gonna lie to y'all. Every time I traded, I lost. Yeah, you just gotta know. You gotta know your faults. And gold, yeah, that shit, it's not for me. Not for me. Yeah, it's more. I go off of what has more confluence. And if you see this 30-minute order block is the same as this 1-hour order block, so we know that there's a higher probability for the specific area. And mind you, the higher the time frame, the higher the probability of it working out. Because the lower the time frame you go, you can see order blocks everywhere. You can see one here, here, here. But the higher the time frame, the higher the confirmation, the higher the basically likelihood of it respecting that area. So say, for example, like we were going over earlier, the daily order block. You see how it's having a massive, is respecting it crazy? If this was, say, a 15-minute or 30-minute, the likelihood of this happening wouldn't be as probable. It can happen, but the higher the time frame, the higher the confirmation, the more likely it is to happen. Here, I'm also drawing my fib from this high to this low down here, just so I can map out where price could likely move to. And now you see that 35,750 area. It's kind of in confluence with this in general right here. Because even though I want to see price come lower, there is a chance that it could just take off. Because we're not always right. It could just take off, and it takes off from there. I'm probably not even going to look to take any trades personally. But yeah, we just got to wait and see. Let the market show what it wants to do. Yeah, it's not really moving right now. Like I said, Martin, towards the end of the year, the trading, this is not the same. The volume isn't there. It's slower. And you can see that now it's been consolidating for a minute. For about since 6:45. So about 1, 2, 3, 4, 5, 6, 7, 8, 9 15-minute candles. And if you look at it on like the 1 hour, it's just losing that momentum. So ideally, we know what we want to see. We still have this 1 hour order block right here. So ideally, if we can continue to close below that, we should be good to see our setup play out. But until then, we just gotta let price do what it gotta do. And it could keep pushing. If it keeps pushing, we just gotta be disciplined enough to not take a trade. That's really what it comes down to. You don't want to overtrade. If you have a high probability setup, all you gotta do is wait for it. Yeah, it's going towards 9 o'clock. We got about 30 more minutes until the open. So if nothing happens by then, you already know we just gotta come back tomorrow with a new set of clear eyes, clear mind, and just do the same thing all over again. It's about a process. As long as you got the process, you'll be good. Just follow the process, the profits will follow afterwards. That's really what it comes down to. Yeah, we just gotta wait now. It's one of them days where nothing's really happening. We'll see. If we can get our setup, it should happen around 9:30, if not maybe around 10 o'clock. 120 pips. I think it could drop easily. Mm-hmm. Yeah, that would be a great trade if we're able to catch that. But personally, as of right now, based on what I see, it looks like the market just might just keep on pushing, just based off this last 15-minute candle. We do gotta see how it closes, but it is starting to push the top side. So ideally, we'll see what happens. Matter of fact, I'm gonna use this candle right here. This last up candle before this down move right here. This should be a 15-minute order block. I'm gonna mark up to 50% of that also, because once price starts to trade past this area, at that point, the likelihood of price continuing to go higher is going to be far more likely. So we just gotta see what happens. Just take it slow. Just be patient. The hard part's done. We already did our analysis. Now it's the boring part. We just gotta wait for it to either happen or not happen. And that's the one thing I kind of like about trading one pair, is I don't have to sit here and go through multiple charts. If I don't see a setup, then it's cool. I just don't have to take the risk. Matter of fact, while we're waiting, I'm gonna pass the screen off to each of you, and I'm gonna just see how you would personally mark up your charts. And I'm gonna just give my personal opinion on what I would change, what I would keep, just so I can see, have an idea. But I'm gonna start off with Martin because he be knowing what he doing. Yeah, I got you right now. I'm gonna give you host. You can do it when you're ready. Yes, sir. If you want for the Asian system right now, just put the box. Just put the the rectangle, just so we can get an idea. You could delete it once you stop the call thing off, just so they could visually see it. Because since our charts are way different, they're gonna be seeing a whole bunch of different charts. You know what I mean? All right. Okay, so that's your Asian session. Now you good. At some point. At some point. Yeah, I don't think those highs are probably going to get taken out, to be honest. Because yesterday, we didn't clear the previous high or the low. So this week might be a little slow, honestly, because it's a holiday. So we might not even see that taken. So that's why, especially taking unnecessary trades this week, there's no need to. Just got to be patient right now. Mm-hmm. Yeah, it's just all about high confirmation. You want to have the highest likelihood of your trade being able to happen. That's all it is. In simple terms. We just gotta wait right now. Nah, you all good? I got you now. Appreciate it, appreciate it. Good little markup, good little markup. I'm just doing this so you guys can see we all trade differently. We use simple concepts, but the way everyone looks at the market is different at the end of the day. The way I look at it is going to be the same. Martin looks at it. The way Martin looks at it is going to be the same as Bullock looks at it. You get what I'm saying? Everyone looks at it different. So I like to give people another perspective so they can see what's happening. Here, how do I get this back? I got it. Would you one of you guys want to share your screen to see how you would personally mark up, or you just want to spectate for now and just see how we do it for now? All right, bet. I got you. All right, I'm gonna make you host right now. Just share the screen. How do I do it again? Yeah, how do I? All right, I know where to go. All right, there you go. You can share screen now. Hold on, why does it still say Martin? I should see Martin's screen. Try to stop sharing, cause oh wait, you're so, oh, I know why. I got it. All right, bet. Now I just see you. That's crazy. I'm host, I don't know why. Here, if you can, just stop sharing screen. Just leave your camera. I bet I got you right now. I don't know why it's doing that. Yeah, Martin, I'm gonna remove you real quick. Like, I'm just doing it and I'm gonna you can join back. The link's still the same. Oh, he just left himself. Alright, that works. I bet. You able to share your screen, Bullock? Or not yet? Was that Elijah? Oh, it was Elijah. Okay, I got you. My fault. Yeah, I forgot you was here, Elijah. You be on silent mode. Hear that? Now you good, bro. All right, bet I got you right now. All right, you good. You can share screen now. Yeah, the market's just pushing right now. So right now is just a good learning opportunity. Just be disciplined. Don't take too many trades. Yeah. Oh yeah, you on the MetaTrader. That's what I like to see. Okay. That black box. Okay, I can see. I can see. Okay. 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 So it's like the same thing almost. It's general area of mine too. Okay. Okay. It's just basically like another way of visualizing the higher time frame, just based off candles. Okay, that's good. That's good. You can do that. Okay. Okay. Bet. See, this is a good example. Everyone looks at the market way differently, but everyone has what works for them. That's what I like. Previous is high. Okay. Okay. You see, we took out yesterday's low already. Okay. Yeah, it's a very trend following pair. As you can see, if you look at the weekly or daily time frame, it's just all going up. Yes, sir. Especially during London session. When London session has those fake outs, it's a high probability that's either low or the high of the day. And that's something that you guys should backtest. Backtest the sessions. Backtest what happens. You don't need like everything you really need is really in front of you on the charts. All you got to do is just go back and look for specific things. Pay attention for maybe a week, all learning order blocks. Pay attention for a week, understanding the sessions, understanding the Asian session, how it like works with your daily range, understanding what happens during London session when it makes a high or the low. You just want to be able to spectate. That's really what it comes down to. You want to be able to just have a journal too. If you guys don't have a journal, I recommend everyone having a journal, because until you have a journal, you're not really gonna know what you're doing wrong. And if you don't know what you're doing wrong, you're never gonna improve. You got to know what you're doing wrong so you can improve on it, and you got to know what you're doing right so you can stick to doing it. You get what I'm saying? Okay. Just get a process. Yeah. Yeah, you don't always need them all. That's good. It's good. It's good to see another perspective. You have a good. We trade very similarly. You're using some of the concepts. We just the way we look at the markets is different. At the end of the day, we use the same concepts. Just the way we look at it is different. Just like anything else. But I appreciate you sharing. Appreciate you sharing. All right, I'm gonna reclaim host. We have about almost 15 more minutes till the market opens, so we're gonna see what's up. We're gonna see what's up. That's the Telegram. Got you right now. Ooh, okay. All right, bet. But as you can see, the market is pushing right now. But like I said, if it pushes, you just don't take that trade, because what reason would we have had to buy at this point? Maybe catching a breakout, but that's really the only reason. So even though the market might go one way, it doesn't necessarily mean that you should be taking that trade every single time. It doesn't mean that at all, because not every trade is a good trade. The market is going to move regardless of what we do. So we just gotta be able to delineate what's a good trade, what's a bad trade, what we should be in, what we should be out. And as of right now, like I said, I would be looking for trades about now. Once this red came up, this is 9 o'clock. So right now I will be looking for possible trades. The only way I will be looking for possible trade is if price has a possible false break and starts to go down lower. That would be the only way I would be looking for a possible trade, in my opinion. And if it just keeps on going higher, it is what it is. We just let it go. We come back tomorrow. We don't risk nothing. If a day we don't take a trade is a good day. Don't look at it as, oh, I didn't make money. You gotta look at it, oh, I didn't lose money either. I could have lost my psychology. I could have risked way more. I could have blew my whole account today. You gotta look at it like that. You gotta look at the good side of everything. And right now, if you just go to all the time frames, it's just slowly but surely and just slowly moving. Could possibly maybe map out this reaction right here, this breaker block. But if it keeps on pushing past this, then the chances of it doing anything else to the downside is very unlikely. And we just gotta let it do what it gotta do. Yeah, it's just one of them days, slower day. Yesterday was a better day. We were able to catch an easier trade. But not every day is gonna be like that. That's why you just gotta have the discipline. Mental discipline and being able to not take a trade is a major skill that many people underestimate. Not taking a trade is very hard, especially for newer traders, because when you're new to the market, you just want to trade every day. You want to trade. So what I recommend for everyone that's trading, like a beginner or been trading for 6 months or less, is they should just be demoing, just all demo. Learn as much as possible. Learn as much as you can while you could take losses as many times without really losing money. You want to be able to use the demo account to your advantage. Take all the losing trades you want, as many as you want, because you're going to know what you like and you're going to learn. Over time, you're going to start to see patterns that happen on a day-to-day basis. One thing I always recommend for everyone is when you're learning to trade, you got to be on these charts every day, every single day. Even if you're not trading, you at least got to be on the charts to at least visually see what's happening, so that when you come back tomorrow, you're like, oh, okay, I seen this last week because I have it in my journal. I seen this happen. But, oh, I seen this same trade happen yesterday. Let's see if it works today. And if it works out, you're like, okay, it worked out 2 times now. So what's the chance of it working out 3 times? And you see it a 3rd time, it works out that 3rd time. So now you see a pattern that's likely to respect your basically trade. But basically right now, another thing I'm going to be possibly looking, if price doesn't come all the way to this ideal area down here, another possible trade setup that I see based off of a higher time frame. This is our original setup, but just because it's our original setup doesn't mean it's always going to happen. One thing I see is we have this last down candle before its up move will be our 15-minute order block. But if you go down to the higher time frame now, go to the 4-hour, you see that that's also in confluence with a 4-hour order block. While you guys were marking up, I noticed something. I was like, damn, there's also another confluence right here. We have this 4-hour order block along with this 15-minute order block right here. So what does that tell you? It's still a high probability setup. Why? Because we'll be buying below the 12 a.m. open I have right here. Yeah, I'll just make it a little bit darker for you guys to see it. Right here, we're buying below that 12 a.m. open. We'll also be buying at an institutional support area, which is this 4-hour and 15-minute order block, anticipating price to continue higher. So the trend is still the same. We just won't be having that high probability as waiting for price to come all the way down here, because sometimes price just wants to go higher. That's just what it comes down to. But let's see what happens. We're gonna see. We're gonna see what the market tries to do. We have about 10 minutes until the market opens, so we're gonna see. Part of me wants to wait for price to come to this 4-hour order block to take that buy trade to anticipate price to go higher. But at the same time, I want to wait for this trade down here. But I feel as where price is moving right now, just I'm adapting to what's happening. The likelihood of price falling 150 pips and then pushing all the way back up, I don't think it's as likely. I think the higher likelihood right now is for price to trade a little bit lower, going to 930, possibly trade higher. So that's possibly what I'm going to look for right now. And if I take this L on this trade and price does come all the way down to this area, I just won't take the trade. I'm going to keep my risk small and just go on with my day. That's why you got to be able to manage risk. As long as you know what you're willing to risk, you shouldn't be mad at a losing trade. Because as soon as you press buy or sell, you know that there's a chance that you're going to lose money. So when you take a losing trade, don't blame the market. You got to blame yourself. You took a bad trade or the probability just wasn't against you. That's really just what it comes down to. Now we just wait. Simple as that. We're going to wait for price to create a form of resistance so I can pull my fib from this low to this high. And I'm going to map out a possible retracement. And then that's really it. Waiting until the market opens. And we're good. And if we don't take a trade, it is what it is. We'll be back tomorrow. Every day is a learning opportunity. Even if we didn't take a trade, we were able to watch the market. And tomorrow, say we see this exact same pattern. We're going to know off rip that if nothing happens today, that tomorrow, and we see this stuff happening, that we know not to likely trade. You know what I mean? Because we've seen it before. Why take the risk? You know what I mean? Yeah, we just gotta wait for the market to open. But Tabby, how you feeling about it so far? What you looking at GJ right now? Or are you looking at USD with me? Okay. GJ, someone sent a screenshot. GJ looks like it's kind of in range, like slowly. It's kind of like a little consolidating. Okay. Yeah, I'm gonna look at it with you real quick, just so I can see while I wait. Yeah, GJ's. I can see why you would likely want it to fall. The only thing is like same thing with your sturdies. It's a volume isn't here right now. It's just really slow, and that's why you need. Right here. There's a few though. Oh, this. Oh, okay. Yeah, you caught the majority of it then. This one. This area. Okay. You know what's funny? Remember how you were talking about breaker blocks? That's what your setup was. Just like this last down candle that got broken through. Price came back, respected it, came right back down. That's what I'm saying. Like a lot of people, like everyone looks at the market differently. Like we could all be trading the same exact pattern, same setup, same everything, but we'll be looking at it two different ways. That's what the beauty in the market is, honestly. We could all have our own little way of trading and still make money. That's what's so great about it. That's what I fuck with. After this, I would say I would recommend watching my video on the importance of the Asian session, because that one I make it's clearer. Oh, you already did? Yeah. Then you already, if you just keep incorporating that and just back test like a whole bunch of, like a 2 weeks straight, like just day, just day after day, just back test it, and you'll see how it respects it. You'll learn over time. You'll be like, damn, this setup happens often. Because I have this one guy, what's his name? Makai. He's in my Telegram. He started like using the same process I do, and he catches the same trades, and he trades like GBP pairs. So it works very well on those pairs. It works on almost all pairs. Trust me. I started maybe incorporating the Asian session maybe about, I don't even know, a little bit ago, and ever since then I haven't stopped using it. It just gives you a good insight to what's happening overall, in my opinion. Yeah, we just gotta wait now. We got about 8 more minutes. See what happens. Okay. So it's right here. So basically, you're talking about the London continuation and New York reversal. So one thing I've noticed with back testing is when London session has a break of a high, so say for example, price has been moving all day, created this, I'm gonna use random things. Say price was Asian session, price was consolidating. Then London session had a push above that high and traded swiftly lower. We know that if price continues to move lower, we can then look for retracements back to that Asian session to continue lower. So this would be a London continuation. And when I say London has a high chance of making the high of the day, this will be the high of the day in this situation, or the low of the day if you reverse it. Because when London session has that break of an old high and swiftly moves lower, then you know there's a high chance that that could be the high of the day or the low of the day, and you will be looking for a possible retracement during New York session to continue that London session trend. And vice versa for what's it called? New York session. New York session, when New York session makes the high or the low of the day, so say for example during Asian session, you consolidated, then say maybe London session, you had to push higher or whatever, just whatever happened during London session. And then when New York session came, it created a new high of the day. I know that from experience, when it creates a high or the low of the day, the chance of it having a full reversal is going to be very likely. So I'm gonna go into my, I have my iPad, I have my iPad open when I had you guys showing me your charts. You already know I can't get called lacking. But look, this is an example right now. The way market's moving, remember how I said false break scenarios? Oh, I deleted everything. Oh, yeah, let me not do that. Delete everything off my chart. Shit. Just like this. This is actually a perfect example. New York session is making the high of the day right now. And now you can see, if we start to reverse, we know that there's a high chance that price could likely fall now. And now if we go to the higher time frame, we look at where price is moving. Why is it's like all the same? Hold on. Bro, I don't know what this is, like in a different language right now. I don't even know what this is, bro. I honestly don't know what this is right now. Really don't know. Part of me wants to look for a short right now, if I'm really being honest. 9:30. Part of me wants to take this short, anticipating that it will come lower, because now that we are creating this high of the day and this engulfing candle, is showing me that willingness for price to possibly have that reversal now to come all the way lower. Now, if I were to take this trade, I would ideally have my stop about 45 pips above this high right here, anticipating the price to continue lower to at least this 35,500 level if it does reverse. But the reason I'm doing this is because New York session is having this high of the day now. It's making the high of the day. And I know if New York session makes a high of the day, there's a chance of a reversal. And even if it has this reversal, it could likely fall all the way down. It could fall all the way down to here. It could only come here. It could only come here though. Now we got to keep in mind the higher time frame. Is price coming down to this 4-hour order block to continue going higher, or is it going to continue to push lower? Part of me thinks price is only coming lower to then push higher during New York session. So I'm just going to stick to the buy trade at the 4-hour order block. And if it doesn't happen, it is what it is. We take our L. We come back tomorrow. We don't let one L fool us. The only thing is I'm keeping my eye on the higher time frames, and the likelihood of price having a bigger drop, I feel, is likely. Because if you look at it based off of new candles and just the hour, you see what I mean? There's a high likelihood that price can fall. Damn, part of me wants to take that sell, but at the same time, nah. But the only thing I would be wanting to get in now, because I feel when 9:30 hits in about 2 minutes, it's gonna push. I'm gonna get in now because I'm selling above the 12 a.m. open. That's the only reason. If it goes any bit lower, I wouldn't be taking this trade. I'm gonna put it on the Asian session high. Here, I'm gonna just calculate. I said 45 pips stop loss. I'm gonna use that. All right, we're gonna see what happens from here. Just based off of everything we've gone over, I'm basically gonna be selling to this buy area all the way down here. And if I get stopped out, it is what it is. We took our trade. We know the risk going into the trade, so let's just see what happens. We're going into 930. We want to see this volume to the downside. You got to be able to adapt. That's the one thing when you assert, you got to be able to adapt when you assert it is moving. Yeah, slowly. Slowly but surely. And let's see what happens. We gonna see. Alright. Right now, I'm up about 18 pips. We gonna see. I'm gonna let you guys know when I hit that TP1, TP2, and all that. This is a good little learning opportunity for you guys. It's actually funny that you're talking about the reversal situation at New York. We're tapping in this 4-hour order block. So let's see, is price gonna hold this order block and stop us out, or is price gonna have the willingness to keep on going lower? Let's see. It could go either way right now, but I'm going off of just how the hour time frame looks, and I think there's a strong likelihood for price to continue to the downside. Me personally. So we're gonna see. We're about to be at TP1 for about 45 pips, almost 50. We're gonna see. All right, 930s here. We're probably gonna get a retracement to the top side, something like this, before retracing lower, possibly like this. So let's see. We already made part of that up candle. Let's see. It's gonna tap into that area, and let's see if it falls. Whatever happens, happens. Could just keep on going from that order block. Just keep in mind that if we take the L, it is what it is. Oh, it's pushing. It's pushing. Yeah, that 4-hour order block, that probably would have been the best trade in my opinion. Yeah, it looks like it's probably gonna stop us out. But hey, that's what we get going against the trend. But like I said, price came down to 4-hour order block and could likely keep on going higher now. It'd be like that sometimes. So hey, that's why you just gotta keep the risk small. If you risk your 1%, let's just keep it at that. Yeah, see, you good. Just keep your risk small this week. I'm not risking a lot this week due to the fact that it's the holidays, and I already know the volume's not going to be here. So regardless, just keep your risk small. And just keep everything just managed. That's all you got to do. It's a good learning opportunity, though. We'll see. Because there is a chance price could keep going, but like I said, based off the higher time frame, it came down to this 4-hour order block before pushing higher, as you can see now. That would have been the ideal trade, in my opinion. I probably shouldn't have gotten into the sell, but based on the higher time frame, damn, that switched fast. That switched fast. But let's see. There's still a chance it can go. And if it doesn't, just don't hope trade. That's all it comes down to. Yeah, it's close. It's close. That 4-hour order block would have been the ideal. Don't even take another trade, because if it keeps pushing, there's not going to be any sell setups. You just got to let it do what it got to do. Yeah, that's what I'm saying. The clean traffic. The clean traffic. Even if my trade doesn't play out, just look at how the market's moving overall. I'm still in. Hey, came to this breaker block. It's on the hour, but there's a chance it could respect it, but don't hope trade. Don't hope trade. If you're not in the trade, don't even take it, because the chance of me winning this trade isn't as likely as it was when I took the trade. Yeah, that would have been a valid trade, but you can see, look at the pip it came to. Like, don't even look at the fact that I lost this trade, but look at the fact that it came to the pip of this 4-hour order block, and now it's pushing higher. Just keep that in mind, because like I said, even if the trade doesn't go our way, there's still learning opportunities in all of this. There's still a chance it could keep going. We'll see. I don't know. I came close to my stop loss. It ain't stopping me out. Ain't no way. Ain't no way. Yeah, I'm back at break even now. See, could just be retracing to get people to go long again, but I'm gonna hold my short. I trust my analysis. We gonna see. We gonna see. Oh yeah. See, stop playing. Stop man, it's gonna go. It's gonna go. Ain't no way it came all the way back down. It's about to go all the way back up. So let's see what happens. You know what it looked like it was? It looked like it was a stop hunt of this high. But you know what it still did? You want to keep in mind what it still did? It made the high of the day still. And now look where it's going. Yes, sir. TP1 just got hit. Yes, sir. 45 pips. Oh, yeah. But look at the precision. That's why you got to know where to put your stop loss. Because I knew I put it above the 8 session high, but I also put it above that breaker block. Because I knew there was a likelihood that it could keep on going. Yes, sir. TP2 is going to be at this low right here. TP2 is at this low right here. And that would be for 90 pips. I'm probably just going to take some off at TP2. Probably going to try to take off majority of it at TP2 and just let the rest run. Because I'm not really liking the market price action today. It's a little choppy. So, it is what it is. Come on. You got it. That TP2 getting hit today. But look at this. This is what I was talking to you guys about. You got to know where to keep your stop loss. Because if you would have had it at this high right here, like Martin did, you can get stopped out. Because you got to understand, Martin, 930 has a lot of volume. Regardless of what we think we know, 930 has so much volume that you never really know what's going to happen. It can go up, down. As you can see, it went all the way up, and then now it's going all the way down. It's very volatile. And from here, it could still go all the way back up. It could still go all the way back up. So here. See you good. Keep the risk small. We're about to be at TP2 for that 90 pips. See, like, that's why I say volume. Volume. If I wouldn't have waited till 9 o'clock and I would have got in somewhere in here, would have been clips. Would have been done. But since I waited till the volume comes, now I know where price is likely to go for. Like, remember earlier how I said it could reach for this buy side liquidity, then reach for the sell side? But right now I'm break even, so if it comes back to entry, it's just gonna stop me out at break even. But if it does, it is what it is. I'll take that loss. Not even a loss, it's break even, but I'm already breaking. I'm just looking to take some off at TP2, and if it doesn't get to there, it is what it is. Looking to take some off right here. There we go. Come on, keep on going. All right, TP2 is about to get hit. Come on, get that TP2. It's a smaller trade, not the biggest trade, but all right, I just took some off. I hit TP2, 90 pips. Trade's break even. Now we good. We just let it do what it do. If it stops us out, stops us out. If it don't, don't. But yeah, so that was a nice little trade. I'm gonna still let it run. I ideally want to see price at least come to a little bit lower, maybe for about 150 pips. So we'll see what price wants to do. That's why I always leave a runner on my trades, because I know the likelihood of it going lower is very high. Okay, yeah, we dropping now. Yes, sir. So far, we are up 93 pips. Good little trade. Good little trade. Once we get to this 30-minute order block, I'm going to be looking to take another partial. Probably just going to take all of it off at right here, because I'm not going to hold. I don't like to hold sell positions. But like I said, guys, where's the liquidity? It reached for the liquidity below this low. It reached for the liquidity above all these highs. Reached for the liquidity above all these highs. Then reached for the sell side liquidity. Went for buy side. Came for sell side. Now it came for sell side. Once it taps in this order block down here, the chance of it going higher is going to still be likely. So it's going to reach for buy side again. Just simple as that. Little things, little things. Here, where is it at? Where's my MetaTrader? My MetaTrader open? Here, I'll show you guys the trade real quick. I'm gonna share my full screen. Just like that real quick. That off. Where's my MetaTrader at? What's up, MetaTrader? There we go. Oh, okay. But I'm trying to zoom in on my MetaTrader real quick. I see. As you can see, we had got in up here, but right now it's coming back up, retracing. So if it stops us out, it stops us out. But we were able to catch the full down move and able to capitalize on it. So that's all that matters. Like I said, you don't need to catch the full move as long as you're able to catch a portion of it. All you need is a portion of the move to be able to make a living. That's really all it comes down to. Now I'm just let it run, and we done for the day. I wish I had like sound effects for like clapping or some shit. I'll just clap myself, I guess. Fuck it. We lit. Smooth little day. Smooth little day. Like I said, I ideally wanted to take this buy scenario down here, but sometimes you just got to be able to move with the market. You got to adapt. I was still able to sell above the 12 a.m. open, and I was able to sell based off this reversal scenario. So let's just see what happens. Is price going to keep reaching for the previous day's low, which is right here? Actually, where price is at. It's reaching a low right now, so if we can keep on trading below this low right here, we should be good. And that's really it. Nice little successful trade, made about 90 pips. Cool little trade, did it live with you guys, so glad you guys were able to catch this if you did. And if not, as long as you were able to learn something, that's all that matters to me. That's all that matters. We just gotta say you learned a little something today so far. If you did, then I did something right, I hope. You peep how it came to the Asian session high, came to that breaker block, and cleared all the liquidity above these highs. And then what did it do? New York session made the high of the day. So Tabby, like I was saying, when New York session makes the high of the day, there's a chance that it can have a full reversal. And as you can see, it kind of did something like that. But right now, it looks like I'm about to get stopped out at break even. But it is what it is. That's why you always take partials. That's something I always recommend. Martin knows, take partials. When you take partials, you save yourself from a lot of stress. Because look, remember, Martin, when I missed that move that you took yesterday by 10 pips, it would have happened again today. If I would have waited for the price to come right here, it's probably less than 10 pips here. I would have been even more sick. It's 8. I would have been even madder, bro. I would have been even more mad. It's just consolidating. I told you guys, the market isn't going to be the best moving towards the end of the year right now. So you just got to be able to know that, adapt to it. That's really what it just comes down to. Just being able to adapt to the market conditions and just knowing when to stay out and when to get into trades. Like personally, this trade was risky, but I did have my stop high enough to the point where I was able to withhold the drawdown. But not many people are going to have the experience enough to do that. And that's fine though. All right, I just got stopped out, break even. It is what it is. Matter of fact, I'm going to have that right there real quick. Just so I can have my screenshot. And the reason I'm taking the screenshot, guys, is because I have to journal my trades. Like I do. Just like y'all, I ain't perfect. I journal my trades every single day. So I can make sure I can improve on it the next. This is all about improving. Improvement over everything. Here, I can show you right now. I'll show you right now before I end it. I got you. You guys. Actually, I have a video coming out this week you can watch it. It's gonna be on Friday, but I'll show you since you're here right now. I'll show you. But this is exactly what I do right here. I use the website Notion. I have the pair. I have the date that I took the trade. I have my trade grade, so I rank my trade from an A to a C. So an A meaning I followed my rules and I was disciplined. A B meaning I followed my rules, but I wasn't disciplined. and a C being I didn't follow my rules and I didn't have no discipline. I have the setup type. I only look for 2 setups. Like I said, the London continuation or the New York reversal. Today was a New York reversal trade I was trying to take. Then I had the confirmations I had for these trades. I have all my order blocks, my breaker blocks, fib long, fib short, Asian range high, low, and just all these, I don't have to change them. I just leave them as is. So every day I come in, I pick whichever ones I use, and it keeps it simple. My time frames that I saw the trade on, whether I took a W or loss. I'll put the risk reward I had. So say today I made it to CP2. When I journal here, I'll journal it in front of you guys. Why not? So I'm gonna do exactly what I do. US 30, November 23rd. I followed my rules and I was disciplined today. I looked for the New York reversal. It was bearish. And the confirmations I had, here, I'll look at the chart. I look at the chart when I'm doing it. So if you look to the left at the chart, right over here, just like that. So we were going short based off of a false break. So clearing the highs, right? Cleared the high. If it wasn't a fib, matter of fact, was it? It might have been a 38.20% rejection on this higher time frame fib. Kind of. I wouldn't even count that. So I wouldn't say it was a fib short. We went short at the Asian session high. Where's it at? Went short at the Asian range high. I sold above 12 a.m. And I also went short at, was there a level up here? It was like a 30, nah, none of my levels. And then it was a 1 hour breaker block. So just like that, I'll put the confirmations. I put how many, I put the W. I saw the trade on the 15-minute, the 1 hour, and the 4 hour, and the daily. Those were all the time frames I was looking at when I was looking for this trade. And then over here, I put, it was a 1 to 2 trade because I made it to CP2 before price stopped me out. And then right over here, how many pips? It was a 90 pip trade. And then at the very end, I put the before and after screenshots, just like this. So I can go back and look at it later on in the day. And then right here, I will just put notes. So if I did something wrong, I'll put what I did wrong. You got to be hard on yourself sometimes. That's just what it comes down to. But yeah, that's really it. Now you can see price didn't come exactly to where we wanted it to come to, and we would have missed that buy trade if I would have waited for it. So I'm kind of grateful that I was able to capitalize on the short. But now you can see price is likely going to continue going higher now, and it's just going to keep on going. But that's really what it came down to. Nice little trade. And now you can see, remember that 4 hour order block I was talking about? It still respected it. You see? The wick might have came down, but remember, Martin, how I said the volume is in the candles? If I take off wicks right now, like if I take off wicks on my candles, look at it. Came down to it. Starting to go higher. Crazy, right? Repetitive, bro. It's all the same thing. And here, before I do that, now I'm going to show you the last confirmation I had. So remember this Asian session range we had? All right, so here's our Asian session range. Look where the 50% of it is. See what I mean? Everything has its meaning. You might not see it at the moment, but look what happened. Price came, respected the 50%, came higher, had a deeper retracement, cleared this liquidity. Now where's it going for? The buy side liquidity. Came for the sell side. Now it's going for the buy side. Simple as that. Or right here. It probably did on some brokers, but on mine on mine personally, I probably would have missed this trade. But now you can see price is going to keep on going higher. And where's it going to go for? This range over here that we were talking about. This clear traffic. So now you can see the volumes coming in. And we're more than likely going to try to fill some of it in. We're probably not going to fill it all in, but that's really it. But that's really it for today. Nice little session. We were on for about an hour and a half. Nothing crazy. How y'all feel about it so far? Nice little cool day. The liquidity grab, yeah, I'm glad it actually showed an example that I was actually taking a trade on, because that made it way easier for me to, like, as I was saying, I was going over the New York reversal market, was like, it's dropping, it's dropping. I was like, oh man. I look over and I'm like, this could be a good example for the New York reversal. And as you can see, like I said, you don't need to catch the full move. I was able to make my trade off of this up candle. Nobody probably would have been selling on this candle, but at the moment, if you look at it like on a 5-minute, we were able to catch this full down move. And now it's just going the other way. We're in and out. And honestly, if you really wanted to get into a buy trade, you could just use, if you go to a 2-hour time frame, could have got in off of that. The 2-hour right here. Then if you put the 50% of that 2-hour order block right here, that's where you get precision. That's how you get precision right there. Go to the lower time frame and look at that. This is when people say the market isn't random. When the market is random, I'm just like, yeah, that's cap. Because listen, if it was random, you wouldn't be able to predict specific trades like this. And that's just really what it comes down to. But now, yeah, took a little trade today. Lower risk. Hopefully you guys enjoyed. I'm going to end it off here. I'm going to see you guys tomorrow. We're going to see what's up. We took our winning trade, so if we don't take a trade tomorrow, it's good. We made our risk. It is what it is. Take the week slow, and we'll just do that. Now, I'll see you guys tomorrow. Hopefully, you all enjoyed, and y'all be safe. All right, Tabby, Art, Bookline, Art, Martin, y'all be safe. And you too, Elijah. All right, Bruce. Anytime, anytime. Nah. Damn, I forgot I was live here, but nah. Everyone, y'all be safe, and I'll talk to y'all tomorrow. Hopefully everyone enjoyed the live. We did a nice little live trade. But yeah, I'll see you guys tomorrow. Everyone stay active, stay